Good day, traders, and welcome to the premium newsletter for Monday, June 17, 2013. Lots to talk about today. Let's first start with the fundamentals and go from there. This week on Wednesday, Chairman Bernanke is going to provide further clues as to whether or not the Feds are going to continue or discontinue the bond buying program. More importantly, traders believe the Feds will provide more clues as to what indications of economic growth they're looking for, and two, when they are planning to make their decision. This should provide investors with a better idea of what to expect in the upcoming weeks. One of the reasons why the stock market is rising so high this morning is because investors believe the Feds will not, I repeat not, discontinue the stimuli program in the near future. So once again, negative economic news is interpreted as bullish news. Keep in mind this only works in the short term, and eventually the market will begin following rational logic and will manifest itself in the stock prices in the next few months, one way or another. Before Wednesday, the only fundamental news that's going to be released is the housing starts and consumer price index. Both are scheduled for tomorrow before the opening bell. However, Wednesday, which is a big day, we have three major events. All three announcements are FOMC related, and the final one will be Chairman's Conference. All meetings occur between 2 and 3 p.m. Eastern Time on Wednesday. I highly recommend you do not initiate any positions till after the announcement. Wall Street will be in speculation mode and will be very range-bound and choppy till that time. You can see by looking at the intraday SP chart that the stock market is in a very interesting level. If it breaks the resistance level, it will go down to the 1600 level, and the resistance becomes support. The market will try and test the previous high price near the 1700 level, and I believe it's 1690 to be exact. I'm afraid till Wednesday, the US market will be very random without much directional bias. One market that I'm very keen on today is the 10-year bond futures market. The contract has a 4x4 entry pattern, and technically the trend looks like it's going to continue moving down. Also, the fundamentals are in line with higher interest rates, so make sure you consider this position on the 10-year notes futures contract. If you don't have a futures account, there's a few stocks that track this contract. Just send me a quick email and I'll provide you with a list of the stocks and ETFs that correlate strongly to interest rates. If you do have a futures account and want to take advantage of this position, I recommend selling short on a stop at 130, 1430 seconds. I would place a buy stop at 131, 1630 seconds. If the position fills, I will update you on the profit target in the next day or two. Another market you want to focus on is the gold market. Gold looks like it's setting up for a descending triangle. These are very accurate bearish patterns that take several weeks or a few months to set up correctly. I will attach a link to this email that discusses triangle patterns. The fundamentals also point strongly down, and the only reason gold market is range-bound and choppy is because the market is very heavily influenced by interest rates. So I'm anticipating a further breakdown in gold market in the coming days. I will also keep you updated here as well as things develop. Looking at our existing position, we have PFE, which is only up a few cents from the previous close. Considering that the stock market is up over 100 points today, and the fact that the stock is very correlated to the stock market demonstrates lots of weakness in Pfizer at this time. I still believe the stock will be coming down in the next several trading sessions and is reaching overbought levels as we speak. A correction is due, and we are still in a profit target as we speak. Therefore, I will hold the position and maintain the original stop loss level as well. There are a few new setups for today. I will list them for you. However, I'm not initiating any positions in the stock market till after Wednesday's report from the Feds. The first position is YUM, ticker YUM, and it's Tricon Global. That's the name of the company. They're probably the largest fast food restaurant business in the US, including KFC Chicken, Pizza Hut, and Taco Bell. There's a 4x4 setup there. The other setup is HDB, which is an Indian bank, and the stock is very interest rate related. The stock is following the 10-year bond futures contract and is highly correlated to it. There's a 4x4 entry here as well to the downside. Tomorrow, I will finish up the relative strength ATR section that we started last week and get ready for Wednesday's announcement. The second part of the week is going to be busy, so I want everyone to be prepared. Good night, everyone, and I will touch base later tonight or tomorrow morning. Have a great evening, everyone.